Imagine this. You wake up, check your phone, and see an ad for cheaper car insurance. Sounds like a win, right? But what if that same AI knows you speed late at night or predicts you'll file a claim soon, even though you've never had an accident? This isn't science fiction. It's happening now. Across the world, insurance companies are using AI to track our habits, purchases, and even social media to guess how risky we are. Sometimes, they know more about us than we realize. Let's break down how this technology works, why it's booming in 2025, and what it really means for your money and your privacy. The big shift. Why old insurance methods are broken for decades. Insurance was all about paperwork and averages. Companies looked at your age, zip code, job, and driving record. That's it. You got lumped into broad categories: young driver, homeowner, smoker. But that old system left billions on the table because it treated everyone in a group as the same. Actuaries, those number crunchers behind your premiums, knew the system wasn't perfect. But they didn't have the tools to get personal. Enter AI. With today's machine learning, insurers can pull massive amounts of real-time data from your fitness tracker, your car's GPS, even your online purchases to create a hyper-personalized risk profile. It's a revolution that's reshaping car, health, life, and even travel insurance. How AI actually predicts risk. The tech behind the curtain. So, how does AI do it? First, it gathers tons of data, not just from you, but millions of people like you. For car insurance, telematics devices plug into your car, tracking speed, braking, location, and time of day. For health insurance, wearables like smartwatches monitor your heart rate, sleep, and activity levels. Next, algorithms find patterns. Maybe they notice people who drive late at night on weekends are 30% more likely to have an accident. Or people who skip sleep more than twice a week tend to file health claims for heart problems. Finally, these insights get turned into risk scores. Instead of lumping you into a general group, AI says, this person is unique. Here's exactly how risky they are. And your premium, the price you pay, adjusts instantly. Real-life example. The car that tattles on you. Let's get real. Imagine you install a safe driving device to save money. You're cautious, but every so often, you speed up on empty roads at night. That device logs every mile, every sudden brake, every turn. Your insurance company sees the full picture. They see you brake hard once a week, maybe you're texting and not paying attention. They see you often drive after midnight. Statistically, that's higher risk. At renewal time, the AI decides you're riskier than you look on paper. Your neighbor, who drives slower but has an old fender bender from years ago, gets a lower rate. Suddenly, the discount isn't saving you anything. Health insurance, the wearable that knows when you're slacking in health insurance. The trend is booming too. Major companies like Vitality, John Hancock, and Oscar Health are using fitness trackers to monitor customers. When you hit your step goals and close your rings, you earn points. Miss your sleep targets too often, and your risk profile shifts. On one hand, it encourages healthy habits. But it also means your private health data could affect what you pay. The question is, what happens when AI detects signs of a future condition you don't even know about yet? Would they raise your rates or deny you coverage altogether? Home insurance. AI in smart homes, smart doorbells, water sensors, and security cameras are more than just cool gadgets. They're another source of real-time data. Some home insurers now offer discounts if you install smart smoke detectors or leak sensors. AI can predict the risk of fire, theft, or flooding based on how you maintain your home and neighborhood patterns. It can even pull in weather data to warn about floods or hailstorms. That sounds great, but it also raises concerns. If you forget to lock your smart door once too often, could your premiums rise because you look careless? The privacy dilemma. How far is too far? Here's where it gets tricky. AI prediction depends on big data. That means insurers are hungry for everything: your credit score, Facebook posts, shopping habits, even what you search on Google. Some companies scrape social media to catch fraud, like someone on disability posting beach selfies. But others use that data to build hidden risk profiles. In some countries, there are laws protecting how insurers can use your data. But in others, the lines are blurry. Critics worry that AI-powered insurance could become a surveillance premium. The more you let them watch you, the more discounts you get. The less you share, the more you pay. Where this is happening now, AI-powered insurance isn't a sci-fi fantasy. It's happening worldwide. In the UK, companies like Aviva offer telematics-based car policies for young drivers. In the US, John Hancock gives customers free Fitbits to track their health. In China, Ping Insurance famously combines AI with facial recognition and big data to sell micro-policies in minutes. In India and Southeast Asia, pay-as-you-go insurance is growing, driven by AI-powered apps that track ride-sharing drivers, delivery couriers, or gig workers in real time. The risks. When AI gets it wrong, what happens when the algorithm makes a mistake? AI is only as good as its data, and data can be messy. People have reported being penalized for things they didn't do. A glitchy sensor thinks you're speeding when you're not, or a smartwatch misreads your heart rate. Bias is another problem. If an AI learns from biased historical data, it can unfairly target certain groups. For example, zip codes in lower-income areas might be flagged as riskier just because of old crime stats, even if you've never made a claim. The fight to regulate AI and insurance lawmakers around the world are racing to keep up. The European Union's AI Act, expected to take effect soon, will impose strict rules on how companies use algorithms to make decisions about people's lives. In the US, state regulators are exploring rules to stop unfair discrimination. Some states now require companies to explain how their algorithms work, a big step towards transparency. Consumer watchdogs argue that people should have the right to know exactly how their data is used and to opt out of invasive tracking. Can AI be good for customers too? It's not all doom and gloom. AI can make insurance cheaper and more flexible for millions. Young drivers with no history can prove they're safe through telematics instead of paying sky-high premiums just because of their age. People with healthy habits can earn real rewards, free gym memberships, cash back, even cheaper meds. And for insurance companies, AI helps spot fraud faster, which saves everyone money in the long run. What comes next? Experts predict the next wave of AI insurance will get even more personalized. Imagine an AI agent that checks your driving each month, your health every week, and adjusts your premium every day, like dynamic pricing for your life. Self-driving cars could rewrite the whole playbook for auto insurance. Who's responsible when there's no human driver? Smart cities will feed insurers constant streams of data about weather, crime, and traffic. But with all this power comes a choice. How much of our lives are we willing to trade for a few dollars off our premium? What do you think? Are you comfortable with AI tracking your every move if it means paying less? Or would you rather keep your data private and pay a little more? Drop your thoughts in the comments below. I read every single one. If you found this eye-opening, hit that like button, share it with someone who still thinks AI is just for robots, and don't forget to subscribe for more deep dives into how technology is shaping our world, one prediction at a time.